Hello, everyone. I'm here with Yuko, CEO of Hito LLC. Today, we're going to go through updates and changes from the One Big Beautiful Bill, or OBBB for short, how this impacts businesses of all sizes. We're going to talk specifically about R&D tax credits and capital investment credits, and even a rural job credit if you are a business in Florida. And then what steps you can take now, whether you're in Florida or anywhere else, to put more money back into your business with looming deadlines and policy changes. So welcome, Yuko. We're excited to have this conversation.
Good to be here, Paul.
Let's jump into it. So OBBB or OBBBA or OBBB or whatever acronyms we're using these days. I know this was passed back in July. But it seems like there are some changes, some big things that have happened. Fill us in. What's happening specifically as it relates to R&D tax credits? I know there's been some big pain points that were expired. Is that right?
Expire or retroactively, eliminated. So the OBBB or OBBB hasn't changed anything since July 4th, 2025. But specifically for research and development tax credits, IRS just published the Red Proc 2025-28, which clarifies ambiguity there were in the One Big Beautiful Bill. So I want to talk through that. So just to go back, One Big Beautiful Bill has repealed Section 174, which was if you're doing research and development, you had to capitalize it and amortize over 5 years for domestic or 15 years for foreign. So foreign research expenditure, you still have to capitalize, amortize over 15 years. However, they eliminated domestic expenses because this was such a big deal for small to mid-sized businesses, increasing tax bills for last couple of years. So for larger company, which is defined as more than $31 million in the gross revenue, average gross revenue for last 3 years, you don't have to amortize it going from 2025 taxable year.
Oh, nice.
For small businesses, which define less than $31 million, average 3 years last 3 years, they can retroactively go back to 2022 taxable year and then unwind that capitalization. So there's 3 ways to do it. And they came out with pretty clear distinction is you could go back and amend 2022 through 2024 tax returns if you already capitalize it and amortize it. Or you could accelerate in 2025 tax year, or you could accelerate those unused amortization in 25, 26 taxable year.
And that just depends on what your previous taxes look like to see where you get the most bang for your buck.
Yeah,
Businesses.
definitely.
Interesting. And when you say domestic versus foreign R&D, does that mean it's owned domestically or the research was done outside of the United States?
Yeah. Whenever we say foreign, any person who are conducting research and development overseas, that's considered to be foreign, whether company is in U.S.
Got it. So if you did your R&D in Europe or in Asia or whatever that was, you don't get to amortize. You have to amortize that over 15 years as opposed to taking it immediately.
Correct. And a lot of question we get asked, a lot of people are contracting was Upwork and contractors or and they will say hey, we are paying Upwork, which is in California. Those companies are in the U.S. And can we take that as domestic R&D expenses? And typically we will say, where are those people located? If they're located in Asia or Europe or anywhere else in other than U.S., that's a foreign expenses.
I see. That makes sense. So it's really, on the face of it, encouraging more investment into human capital in the United States, and there's a significant incentive to do so. But if you're using people outside of the US, then you still get a tax credit. It just has to be amortized over 15 years.
Correct. For the
Got it.
expense side. Yeah.
That makes sense. So this is also a chance to recoup some of that because it did sunset, right? So you can take it in the previous years and reamend your tax returns. You can accelerate that and take it all in one lump sum year. I know that there's also some small business relief. Tell me more about that.
So small business relief was like, they can go retroactive to 2022 and then unwind that capitalization. So you can accelerate those like expenses in 1 year or that year's like, it incurred. So you could amend or like, you can accelerate 25, 26. But like, it's all depends. You need to go back to your CPA and like, review it together. Like, what makes most sense for the businesses.
Yeah, so you're trying to see what you did before, and if it still makes sense, and your CPA can run some calculations there and tells you, now if you're not amortizing this over 15 years and you want to take that all up front, does that actually serve the business?
Yeah. And other things too, like, just mention, like we had a couple clients, like, we talked about whether or not, like, we want to amend or we want to accelerate those unused amortization in 25, 26. Their R&D credits and R&D expenditure was like, pretty small. So it doesn't make sense them to go back and like, amend it and incur those like, costs like CPA will like, charge for amending returns. So it's always like cost benefit analysis we have to do.
Yeah. So if the gain is small, you may not want to change. I'm assuming if we want to put more money back in your pocket and you can move from having a 15-year amortization schedule to just accelerating it all this year, what's the deadline for this?
So if you want to amend it, the deadline is like year from that bill passed. So like July 6, 2026. And if they are just accelerating like on 25 tax year or 25, 26 tax year, those are claimed on those like, years original tax returns.
I love it.
Yeah.
So good news for domestic R&D. Obviously, the immediate deduction is back. Foreign obviously still gets stretched out over 15 years. Small businesses have this really powerful retroactive option. What's the definition of that small business retroactive option? I mean, I'm assuming it's gross receipts or something along those lines.
So they are looking at 3 previous year average, like gross receipt needs to be like 31 million or less. That's defined as small businesses.
Such a weird number. Why 31 million?
So whenever like the 25, so it was like, beginning was $25 million and like, over the years, there was an inflation adjustment. So like, 2024, it was 31 million or less.
Okay, that makes sense.
Yeah. And then just to note, like one thing for 2024 returns, like, the OBBB came out July 4th, 2025. And this notice didn't come out till like, a couple last week. So there was a lot of ambiguity, like, how to file the 2024, apply OBBB changes to 2024 tax returns. So in the OBBB, it was not clear you could, like, deduct the R&D expense on the original tax return, or you had to file it with 174 capitalization and amend it. So this bill has like, came up like, little bit more clarity saying that, hey, if you already filed with the capitalization, they're going to be automatic 6-month extension to refile, superseded like, tax return with that capitalization taking out. So if you're small businesses, like, you probably want to talk to your CPA and like, figure out what was the basis, like, they filed the tax return on. If they took like they capitalized the research and development cost, you probably want to like, file the superseded tax returns within the 6 month.
I see. So this is there, and given the deadline of June 2026, the goal here is to get proactive and figure out what you're going to do fairly quickly. Even with that 6-month extension, there's a ticking time bomb, a limited window in getting this done.
Right.
I love that. Let's move on to Florida. So I know I feel like every one of these podcasts starts with a lot of updates to OBBB, and then we move on to state specific. And so this episode, we're really talking about Florida R&D tax credits. I know that most states have some sort of overlap with the federal tax credits. Tell me more about Florida specifically.
Yeah, so Florida R&D tax credit piggyback on federal. Only difference is their R&D is very specific to industry basis. So if you're unless you're in manufacturing, life science, information technology, aviation, aerospace, homeland security, which is interesting one, and defense.
I haven't heard that before.
Yeah, cloud information technology, marine science, material science, and nanotechnology industry. Those are the industry they can take R&D tax credits in Florida.
In addition to the federal credits that you would already
Correct.
get as well. And so how do you apply?
So number one, you have to get letter from Florida Department of Commerce saying that you're in that industry. And number two is every single year, if you're intending to claim the R&D tax credits, you have to apply pre-application, which is you can apply online, but the application phase starts for 2025 taxable year or calendar year taxpayer that opens in March 20th, 2026. So just making sure that in addition to filing that tax return, there gonna be application process.
So your CPA or Hito LLC or whoever goes to the Department of Commerce and obtains that letter for you. Then you apply online, and then you can work through, if you're in one of those specific industries, you can match that R&D tax credit,
Correct.
to what the federal sort of structure is. Am I understanding that correctly?
Yeah, definitely.
Okay. Life sciences, IT, aviation, aerospace, homeland security and defense, which I haven't heard before, cloud information technology, marine sciences, material science, and nanotechnology industries. It's very specific. I love it. Can't wait to get to some silicon chip manufacturing or AI, but I'm sure all of those are somehow rolled in. So that's R&D. How about capital investment credits?
So capital investment tax credit, this is more a larger company doing very specific industry as well. So these are any company creating silicon technology facility, transportation industry, or solar panel manufacturing facilities. So this is very specific, but I thought I will mention because with the ITC investment tax credit, federal investment tax credit, sunsetting, I've heard, a lot of people are doing solar farm project nowadays. So if you're in that industry, you must invest in at least 25 million in the States. But if you qualify, the credit is about 5% of the eligible capital cost generated in the States. So which is significant.
Yeah, it's a big investment, but it's also a big payoff there. 5% is legit on a significant size business. That's interesting. So 25 million, Silicon Technologies, feels like new tech. I'm not sure why transportation industries is that. I don't even know. I mean, what would you be doing there?
Yeah, I don't know, but I think there might be state might want to attract the transportation industry to that, some reason.
And then solar panel manufacturing, which it's Florida, California, Texas, hot states, makes sense. They also have rural job tax credits. Tell us about those incentives.
Yeah, I picked the rural job tax credits because this is location-based tax credits, which incentivize creating job in the rural counties. So if you're in a rural county and creating new job, the credit could be $1,000 to $1,500 per qualified employee, and it will be capped at $500,000 in any calendar year. But I thought this might be interesting one to talk to you, and we always only pick couple example, but even Florida also has numerous tax credit for businesses and also individuals. See what would it be qualifying for.
So if you are in a designated rural area, you're creating new jobs, you can get a credit for $1,000 to $1,500 per employee, capped to $500,000 in one calendar year.
Correct.
And you just take that as they'll cut you a check. How does that work?
Yeah, so it could be applied against the taxes, and then if you cannot use it, like you can like carry 4 to 5 years.
Got it. Okay. So yeah, it's a carry forward benefit
Right.
if you don't use it all in that current year. That makes sense.
Yeah.
I love it. Thank you, Yuko. This is
Of
always
course.
fun and enlightening. I'm sure we'll get more changes to OBBB in the next conversation. It feels like this is a rapidly evolving space, and there's more money being given to domestic investment. And so that's really exciting for American businesses. And we hope that we can capitalize on a lot of that tax credit structure. And this has been great. Thank you.
Yeah. And can I say a couple more things?
Yeah.
So as everybody like wrapping up the tax season right now, like, if you feel like you pay too much taxes and couldn't do anything about it, like, this might be like, something like you might want to like, take a look at. And always tax credit takes a little bit of time to plan it. So if you're thinking about, or like, as that year end come up and like, strategic like conversation coming up in your company, like, if you're hearing like, hey, we might need to add like, 10, 20 people, or we need to relocate, or our lease is up and like, we need to really think about where to move. Those are the times like, you might want to like, talk to your CPAs or somebody like us who specialize in tax credit, tax incentive to say, hey, before we make investment, like, what can we do to like, get like, states help or local jurisdiction help to like supplement those like, growth.
Yeah, that makes sense. There's no bigger incentive than just having a huge check cut to the government and you not wanting to pay that money out. Mm-hmm. So we tend to set it and forget it, like, oh, we just got through that. But it's the time to move is now. What's the analogy? The best time to plant a tree was yesterday. The next best time is today. So I think that's probably true for most of us paying taxes and running businesses. The planning, most of these tax credits require some proactive planning.
Yeah, definitely.
All right. Well, thank you, Yuko, and
Awesome.
we'll catch you on the next one.
Thank you, Paul.